Are you confused about whether you should invest in a Roth IRA or a 401k? You're not alone. Millions of Americans are trying to figure out which account will actually help them retire faster. And here's the thing, choosing the wrong one could cost you hundreds of thousands of dollars over your lifetime. But don't worry, by the end of this video, you'll know exactly how a Roth IRA and a 401k work, the pros and cons of each, and which one makes the most sense for you. Stick with me, because if you're serious about retiring early, or just retiring comfortably, this could be the most important money decision you make. Most people don't save enough for retirement. According to the Federal Reserve, 1 in 4 Americans has no retirement savings at all. Even worse, those who do save often don't know if they're saving in the right place. Think about it. If you don't understand where your money is going, how can you expect it to grow? People often ask, should I put my money in a 401k at work, or should I open a Roth IRA? Which one helps me retire faster? This confusion leads to inaction, and in personal finance, doing nothing is usually the most expensive choice you can make. Now imagine this, you're 65 years old, you've worked hard all your life, and you check your retirement account, but instead of the $1 million you thought you'd have, you see only half of that because taxes ate the rest. Or maybe you only invested in one type of account and you realize too late that you could have doubled your money if you just used both smartly. This isn't just numbers, it's freedom, travel, time with family. The difference between choosing wisely and choosing poorly could literally mean working 10 extra years. So let's break it down. Roth IRA versus 401k. We'll cover what each account is, the tax differences, contribution limits, employer match, withdrawal rules, which account helps you retire faster, and finally, how you can use both together to maximize your wealth. Part 1. What is a 401k? A 401k is a retirement savings plan offered by your employer. You put money in directly from your paycheck. That money is invested, usually in mutual funds, index funds, or target date funds. You get a tax break today. Example, if you make $60,000 and contribute $6,000 to your 401k, you're only taxed as if you earned $60,000, $54,000. The money grows tax deferred, but when you retire and withdraw it, you pay taxes then. Part 2. What is a Roth IRA? A Roth IRA is an individual retirement account you open on your own. You contribute with money you've already paid taxes on. That money grows tax-free. When you retire, you can withdraw it tax-free. Example, if you invest $6,000 in a Roth IRA at age 25 and it grows to $100,000 by age 25-60, you can take out the full $100,000 without paying a single dollar in taxes. Part 3. Tax differences. This is the biggest distinction. 401k equals tax break now, pay later. Roth IRA equals pay taxes now, withdraw later, tax-free. So which is better? It depends on your situation. If you expect to be in a higher tax bracket later, Roth is usually smarter. If you need a tax break today, 401k can help reduce your taxable income right now. Part 4. Contribution limits. In 2024, you can contribute up to $23,000 per year into a 401k, plus an extra $7,500 if you're over 50. For Roth IRA, the limit is $6,500 per year, or $7,500 if you're over 50. So the 401k lets you save a lot more each year. But remember, with a Roth IRA, even though the limit is smaller, that money grows completely tax-free. Part 5. Employer match. This is where the 401k shines. Many employers offer a 401k match. For example, if your company matches 100% up to 5% of your salary and you make $60,000, that's an extra $3,000 every year, free money. Fidelity found that workers who take full advantage of their employer match can retire 5 to 7 years earlier than those who don't. That's why financial experts often say, always grab the match first. Part 6. Withdrawal rules. 401k. You can start penalty-free withdrawals at age 59 and a half. If you withdraw earlier, you'll pay taxes plus a 10% penalty. Roth IRA. You can withdraw your contributions, not earnings, anytime without penalty. Full tax-free withdrawals also start at 59 and a half. This makes the Roth IRA a bit more flexible if you ever need the money in an emergency. Part 7. Which helps you retire faster? Here's the truth. Both accounts are powerful, but for different reasons. If your employer offers a match, the 401k is the fastest way to build wealth. That match is like a guaranteed 100% return. But the Roth IRA gives you tax-free income in retirement, which means you'll actually keep more of your money. Let's say you invest $500 a month for 30 years. In a 401k, it could grow to about $600,000. But after taxes, you might only take home $450,000. In a Roth IRA, it also grows to $600,000, $600,000. But you keep the full $600,000 tax-free. So if your goal is to retire earlier and with less tax stress, the Roth IRA is often the better long-term play. Part 8. The Smart Combo Strategy. The best investors don't choose one or the other, they use both. Here's the strategy. Contribute enough to your 401k to get the full employer match. Then, put money into a Roth IRA. If you still have money left to invest, go back and max out your 401k. This way, you get the free money from your employer, plus the tax-free growth of the Roth IRA. This combo gives you flexibility. Some money taxable later, some money tax-free. That's called tax diversification, and it's one of the smartest retirement strategies out there. If you want to retire faster, always grab your 401k match. It's free money. Use a Roth IRA for tax-free growth, and if possible, do both. Don't wait until your 50s to figure this out. Start today, because the earlier you begin, the more powerful compound growth becomes. If this video helped you, hit the like button, subscribe for more money tips, and share this with a friend who needs a retirement game plan. Your future self will thank you.